Good afternoon, everyone. Welcome back to the channel. Today we have Jack in the Box. We're going to do a quick little fundamental analysis. They just posted earnings yesterday, so we're going to talk about the quarter 4 2025 earnings transcript. The stock is currently sitting at $15, only a $300 million valuation now. Year to date, it is down 61%. It's pretty much done nothing but drop for the past 5 years. Is this the bottom for Jack in the Box? We've seen a little jump in the past couple days, but should you be investing in this company or just sit on the sidelines for now? If you're new to the channel, guys, don't forget to like this video, but let's go ahead and get started. I'll pull up the financials real quick. I've already inputted them right here, and on the right side will be that latest quarter 4. They posted $326 million in total revenue. That is down 6% year over year. They're currently sitting on 9 consecutive quarters, guys, of negative revenue declines. They are struggling hard. The latest earnings per share they posted 30 cents versus $1.13 from the previous quarter. That is down 73% year over year. So besides these 2 quarters, it's not looking good for Jack in the Box. Profit margins have been declining from a peak of 30%, down a couple points. Latest cash flow from operations, they posted $59.7 million. That is up 31% year over year. But the previous quarter before that, guys, just look at that number. Let's bookmark that real quick. As you go down to net income, they actually had positive net income this quarter. So let's go ahead and go to the transcript. What is the major thing that happened with Jack in the Box? Well, they are selling their entire stake in Del Taco for $115 million. Looks like Jack in the Box needs some cash, guys. If you go to the balance sheet, they're sitting on $38 million in cash left. From 2022, they had $108 million. 3 years later, they are down pretty much a third. And if you go down to long-term debt, it is not looking, that is a lot of debt. $1.6 billion in long-term debt. How much interest are these guys paying? $80 million. Let's see how much interest they're paying. We're on quarterly. Per quarter, Jack in the Box is paying about $18 million just on this long-term debt. So that's a lot of money. And their money is slowly going away. I believe that's one of the reasons why they have to sell Del Taco. They need some liquidity. They're a struggling retailer. They need some liquidity. They are not satisfied with their 2025 operating performance and are rebuilding our operational discipline to drive growth and shareholder value in 2026. Let's go ahead and check FinViz. Let's see if there's any insider buying. So the stock is heavily shorted. They don't have a lot of shares float. 10% of the insiders own the company, so that's pretty good. Lots of downgrades and no insider buying. A ton of insider selling. Let's go ahead and check institutional ownership. Institutional ownership is falling down, guys. Yeah, so be careful on this one. Institutions are dropping. No insiders are buying. Low on cash. They're selling Del Taco to raise cash. According to the transcript, same-store sales are down 7.4% year over year. They are also closing a ton of restaurants. 38 restaurants closed in quarter 4. They're cleaning up underperforming locations. As of right now, they have 2,136 Jack in the Boxes and 576 Del Taco restaurants. Here's some of the real estate. We sold 3 real estate properties during the quarter, generating $4.8 million. So they're starting to sell the restaurants. They have to sell Del Taco. They need to raise some money. Remember, when you go to the balance sheet, $38 million is not a lot of money for a company. So they need to raise some money because they have so much debt that they have to pay these interest expenses. On the bright side, they do have $175 million remaining under their share repurchase program. They could borrow another $96.8 million. Total debt is sitting at $1.7 billion. Yeah, I don't know about this one. It's just going to be a lot of work for the company into 2026 with sales and margins down due to consumer pressures, elevated costs, restaurant closures, getting rid of Del Taco, and they have to do a re-image of the whole company. I'm just not too into what's happening with Jack in the Box right now. I think out of the fast food restaurants, it might be one of the weakest ones. The number one reason that I don't like this company is that huge amount of debt. They're going to have to keep raising money somehow to pay those interest rates, or they're going to need someone to buy them out. Either way, I don't think Jack in the Box, even with the re-image, can return to how they were doing in 2020, 2021. I think they're just a declining fast food restaurant. Let's keep it at that. I'm not a fan of Jack in the Box. Let me know what you guys think in the comments below, and we'll see you on the next video.